Greetings, I'm Michael Scott, and it's good to be with you again. I'm the Video CPA. Today we're going to talk about taxation of living trusts, and which should be of interest to a lot of you, especially those of you that are approaching a more mature age, because we start worrying about these things as we get older. But living trusts are an example of an area of taxation that not a lot of people know about. And so we're going to get into that today. I'm a certified public accountant. I have been for 45 years. I'm also a certified management accountant. And I have a master's degree in accounting from Brigham Young University. It's good to be with you today. I am the Video CPA, so let's get into this right now. All right, we've got our disclaimer here that says that if you ever buy anything through our site that we get we may make a commission on it. Haven't done so yet, but I can always hope. And then we've got our education disclaimer that says, hey, do our best to keep this stuff accurate. And so far, I think I've had everything accurate. But if I do make a mistake, you've got a responsibility to make sure that you investigate things also. So what is a living trust? You know, I looked online to see how Dave Ramsey and some of the other gurus defined it, and Dave actually uses very colloquial words. But anyway, it's a legal entity formed by an individual or a couple to keep track of their assets. It's more like an envelope where you can put your assets in there, and those assets during your lifetime, then you can actually, in those trust documents, write up how you want those documents distributed. So that's basically what it is. During your lifetime, if you get mad at your kids or something, it is revocable, so you can just cut them out. And it avoids probate, so that's a big thing usually. So anyway, it is revocable, though. It is irrevocable, I should say, once you pass away or the trustee passes away. So be aware of that. All right. Do you need a federal ID number for a living trust? No. Not until you pass away, which you're not going to worry about it too much after you pass away, but whoever follows you, your kids or whoever it might be, is going to have to get that tax ID number, but not during your lifetime. You use your Social Security number. So let's get into that and see how you're taxed while you're living. So while you're living, your income tax return, your 1040, anything that you earn that might be in that living trust, interest, dividends, capital gains that were sold in the living trust, all of that is reported on your personal income tax return. So you need to be aware of that, reported on your personal income tax return, your 1040. So you do not need an ID number during your lifetime. But like I said, once you die, you do need an ID number. So while you're living, you use your Social Security number. All right? When you die, however, you need to get, or your beneficiaries, whoever your executor is or your administrator, needs to get a federal ID number. All right? And at that time, that trust becomes irrevocable, and any earnings from that trust need to be reported on Form 1041, which is the income tax return for estates and trusts. Okay, so that return is fairly easy to fill out, but if you haven't done it before, it can be a little daunting. So in that case, I'd go pay a tax preparer to do it if you have any problems with it at all. And I will get into trust returns at some point in time, but it doesn't seem like it's an area of great interest to a lot of people right now. And a lot of people don't fill out their own trust returns. They go to a tax preparer, a CPA, or some other tax preparer. So, are a couple of things that you need to remember here. And first of all is that we do have still offering this free session with a business coach. She's only offering this up until June 5th of this year, though. So if you want to take advantage of this offer, you need to do so quickly, because after June 5th, this offer is not going to be available anymore. So if you do want to take advantage of it, send a email to hello@getyourlifeback.com, and Bonnie will get in touch with you and set up a time where you can have that session. She is a business life coach. She's a CPA. and she specializes in small to medium businesses. So give her a call. I'd take advantage of this opportunity. She's very good. All right, wrapping up the living trust. So when you pass away, you file the 1041 tax return, which is the estate and trust tax return. And that does not last forever, we hope. You should not have to file that forever. But as long as there's income generated by the assets in that trust, that income tax return has to be filed. Now, if you've got a lot of assets in that trust and they don't generate any income or not enough to have to file the return, well, then you don't have to file the return during that time period. But usually, if you've got assets in there, there is some income, and the trust deduction, standard deduction is very low. So generally, you will have to file a tax return for that trust until it's fully distributed. So what happens is you've got beneficiaries in that trust, and you'll eventually distribute the assets out to those beneficiaries. And once those assets are distributed to the beneficiaries, there's going to be no income coming into that trust. So at that time, you can actually file a final return for the trust and close it down. And then you're done with it, okay? But there are a few things you need to be aware of. When you set up that trust, a lot of you guys may go to, an investment seminar, and they will set up a trust for you. But what they don't do is take care of funding that trust. So you need to make sure that your trust is funded. Because if you don't fund the trust, well, then you don't have a trust. And when I say funding the trust, you have to put your assets in that trust. So if you've got a house, you move that into the trust. You may need an attorney to do this. If you've got brokerage accounts and bank accounts, you need to move those things into the trust, okay? And when you do that, well, then they're trust property, and that's why you can go around probate. But you have to fund it. So, and funding just means you put your assets in it. All right. Now, at death, you need to make sure that you get that tax ID number, and I would not wait very long on that, because if you wait, you're going to have things reported under the deceased Social Security number, and you're going to have them reported under the trust number, and there's not going to be possibly a clean break off at the date of death. So make sure you tell the banks, you tell brokerage firms, you tell insurance companies, you tell whoever might be interested that you've got a tax ID number now, that your parent or whoever it might be passed away on this particular date, and they need to start reporting under this new tax ID number, okay? Once you've done that, well, then you're in good shape. But a lot of people don't do that. I mean, they don't realize that they have to get a tax ID number, and so they go 6 or 8 months until they talk to their accountant and find out they should have had a tax ID number for this trust, okay? So that's a good thing to remember. Now, if the trust is very small, I mean, some people probably get away without even having a tax ID number or just reporting it into the Social Security number, but that's not the way it's supposed to be done. So just be aware of that. Trust accounting in this area is pretty easy as long as you do what you're supposed to do and get that tax ID number and get it to the bank so they can change the tax reporting on it. So that's it. Not a lot to it. These things are really exciting, aren't they? I mean, I know you're here because you have to be, but and I would rather be fishing or backpacking or something like that, bowling. But thanks for liking these videos. I appreciate you subscribing, and until next time, thank you very much.